Hey everyone, this is TEAL39 here, official analyst with Cryptotraders.com, and we are here with episode 2 of our trading strategies series. So, reminder before we jump right in, if you guys like these kinds of videos, please consider leaving a like and subscribe because this greatly helps the algorithms find our channel, and this allows us to continue giving you, amazing resources like this. So consider leaving a like, subscribe, or even just a comment down below. And if you guys haven't joined us on our Discord server yet, please consider joining at the link below. We have amazing resources available for all you guys. Access to our chat where lots of experienced traders and analysts leave their trade ideas and setups. We also have live stream academy lessons that teach everything from technical analysis to price action reading and other strategies as well. We also have our alerts channels from our official admins and official analysts. And lastly, very underrated, but we have scanners set up on our channels which measure volatility to help you find those entries into trades before people actually alert them. So here we dive right in. So a while back, I talked about a Keltner Channel strategy, and a lot of you guys, really wanted me to post a video about it. So sorry it's late, but we are finally going to post this video here. And yeah, we got like hundreds of likes, for this video. So hopefully you guys enjoy. I'm going to try to break down as clearly as possible how to set up this indicator. Even though my indicator is custom, I'm going to try to help you guys build yours using free indicators in case you guys don't have a custom version available or don't have a paid version of TradingView. Okay, so we're going to try to use as little indicators as possible just to make this possible. So here I have a blank chart here of Avalanche. I'm on the 15-minute. We'll move around a little bit, but we'll start here. So when you guys go up to the top of your screen, there's this little indicator tab here. I want you guys to click that. I want you guys to type in RSI, Relative Strength Index. We're just going to add that to the chart. We don't want it to be this messy, though, so you guys double-click on the line here. So there's a lot here. We're just going to take away the MA. I'm going to take away the Bollinger Bands. I'm going to take away the middle RSI band. And I'm just going to keep the upper band, this dotted line here, the lower band at the bottom line, and the RSI line itself. And we're just going to change that a little bit. I'm going to change and put this as a 60, put that as a 40. Some of this is personal preference, but I personally, enjoy doing it that way instead. Bollinger Band background is not really required here, but so this is kind of the setup. So you can take a screenshot of this if you like, but here we go. There. All right, let's zoom in a little bit. All right, so next we have Keltner Channels. So Keltner Channel, Keltner. So not the strategies. We're just gonna put Keltner Channels up top. This is a free indicator. As you guys can see, Keltner Channels are here. Now, Keltner Channels are very similar to Bollinger Bands. They have a middle EMA as well as an upper and lower band. Now, the difference between Bollinger Bands and Keltner Channels are that they use different data to form the upper and lower bands. Now, Bollinger Bands will use units of standard deviation, so a statistical measurement of how far the probability is that price deviates from this middle line. Whereas Keltner Channels will use average true range, which is based on real price action. And this is why I like to use the Keltner Channels instead of Bollinger Bands, because Bollinger Bands are just statistics, but this is historical price movement. Okay, so here we have our Keltner Channels. You double click there, there's the upper. The basis is basically your EMA in the middle, and the lower is your lower band, okay? Now, when we go to the source, right, you can see the time frame is on the chart, which means it matches the 15. I will look for entries on the 15, but then I will actually use a larger time frame. So let's put this on a 1 hour, for example. You can see how that changes, because on the 1 hour, and let's change this to a 1 hour, it's going to match more reliably because there's more price action that happens in this 1 hour candle. And so the bands are going to be wider, okay? But they are more reliable because There's 60 minutes in here that was failing to break above and out of that upper band. Okay, so reminders that most price action happens within the bands. So when you move outside of the band to the upper side or to the lower side, it is increasing likelihood that price returns. So that's going to be one way that we can play this. But there are other ways depending on when the market is very, very bullish or very, very bearish. Okay, so let's just go back to the bands for a second. I'm going to move the chart to the 15, and I'm going to leave the Bollinger Bands on a 1 hour. Okay, let's take away the gaps. I like actually just seeing the true movement of the zigzag. Now you can look here. This is the multiplier. So the multiplier here will multiply that average true range by a multiplier of 2 to make it more exaggerated. So for example, if this is on 2 and you touch the upper band, you've really started to deviate. So then it's even more likely for you to rebound and bounce back towards the middle. Okay, so typically what I'll do is I'll use a 1.5 and a 2. Okay, so this is our outer band. Let's change the style here. Let's just say, let's just say this is going to be a red one, because red symbolizes that we're very far. This middle line is going to be a yellow because that's an EMA, and you can see that this is a 20 length. Okay, so I usually keep this at 20. This is our 2.0. Okay, exponential ATR length 10. You can adjust this a little bit. We'll talk about that maybe a little bit later. That's a little bit more advanced. I think for the purpose here, you can keep that as 10. And then actually what we're going to do is we're going to double up on this Keltner channel. So I'm going to type in Keltner channel again. I'm going to deposit a second one. Okay. Now I'm going to move that to the same time frame I had before, which is the 1 hour. And you can see that it matches very, very similarly. I'm going to change the style a little bit, but this time instead of red, I'm going to change the outer to orange, because this is actually going to be a little bit closer. We're going to use ATR. We're going to use ATR 1.5 here. So I'm going to remove the gaps. The yellow lines match exactly, so I don't have to change that. But I'm going to change the multiplier to 1.5. So as I change that, look what we have. Okay, now we're starting to develop an interesting kind of indicator here, right? We're starting to see something very similar to what I have up on my chart. Okay, now you can start, for example, along when you start to hit the orange, because it's already at 1.5 ATRs away from the EMA. But you can set maybe a stop below the 2, right? So you can see that price action doesn't often get to the 2. So here it does. This is a pretty steep sell-off, right? When it gets that far, you can usually play a bounce back towards the line before a rejection, right? So this is basically the simplest way that we can set this up. Now, I tend to put it on 40 because I believe in a bullish 40 bounce. So let's, for example, I always keep the Keltner channel strategy at a higher time frame than the actual chart itself. So maybe, for example, I'm on the 1 hour. I can actually change this chart to a 4 hour. And that's going to change things a little bit. I'll change the orange one as well. So that's now 4 hour. But now this is a swing setup, right? I'm on a 1 hour chart looking for entries when there's a 4 hour Bollinger. So let's just go back a little bit. We're in the midst of a bit of a sell-off. So we won't know if a long at this bottom range plays out until we actually see the bounce back. But let's backtrack and back test this a little bit, okay? So if you consider that most price action happens within the red band, which is our 2.0 multiplier on the ATR, then that means that longing it around the red is a pretty safe bet on the bottom, and shorting it at the red on the top side is a pretty safe bet, right? So for example, here you can see a touch here. I could have longed it here and I wouldn't have gotten filled. Longing it here, I would have gotten filled, and we play the move up to the EMA in the middle. So if you look at the movement there on price range, entry around that red up to that middle line, that's a 5.44% move, right? On any kind of leverage, that's a good play. You scale out some winners here, set your stop loss at break even, and see if this breaks up above. And we do actually. So we actually end up moving up 10.5% on that trade, right? So if you find a good entry like that, you can totally play it. Okay, so different ways to do it. The most reliable way is to play within the bands, because that is the fundamental reason for the band. Majority of price action happens within. So longing it at the orange if you're risky, tight stop below the red, or if you're really waiting for a discount, you can long it when it hits the red. Okay, so that's strategy number one. Strategy number one is longing the outer bands on the upper side for shorts or the lower bands for longs, playing the move back to the middle EMA and a possible test of the top channel. And who knows, if we're in a super bullish market, we break up above. So in this one, for example, you could have longed the orange, move all the way up. It blows through the EMA, rejects slightly, comes down. If you had set a stop at the yellow, right, that would have actually been safe because you wouldn't have stopped out. We'd push back up, churn up into resistance, and then boom, we actually pop up and over. And as soon as you break out of the red, I mean, that's usually a good place to TP because, again, price action usually stays within. And so you're going to see it kind of pull back in. So it's bullish as it holds this EMA until it breaks down here. This is where you start to think, hey, maybe I'll short the pops instead. It comes back up to test. I short it here with a stop above perhaps, and I play this churn down here, right? So you can play this in multiple of ways, but the main strategy is to play price action within the bands. Now, sometimes I do play something different that is like a scalp trade, or maybe, let me see if I can find an example here. So this is an example when the market is super bullish. So you've heard me alert it before. This is what I call a top Kelt skip. So you know, when you guys are skipping rocks on the water, right? It's supposed to sink. A rock will sink, right? A rock would never float on the water. But with enough momentum, it can skip on the top of that channel. So this is what I call a top skip. It hits resistance, comes back down, holds a higher low, blows through, and it actually wicks the inner 1.5 ATR range and skips up again, wicks down again, and stays above. And it just kind of skips 1, 2, 3 times before breaking down below. Okay, so this trade right here, this is what I call a top Kelt skip. Okay, now this is a more advanced trade because what you are doing is you are playing momentum on the volatility, right? Statistically, the price should come back in. So if it's able to stay above, that means it's super, super bullish. So these, if you go look at metaverse coins, for example, right? So I can do this. I have this on a 4-hour chart. This is a 1-hour chart on AVAX. Let's scroll down. Let's look for something like sand. Whoop, sorry, this is really messy here. But let's look at how bullish this thing is, right? So look at this kind of skip. Well, I mean, that's maybe not a skip because actually it sinks down below a little bit. But let's see if I can find another example here. So here we go. Actually, still not quite, actually. Maybe back here. So this is not really, maybe there's an example like right here, right? So this is kind of when metaverse coins started popping. But look at this, right? 1, 2, a bigger pop here, 3, 4, and then on the 5th bounce, it died and it came back down. Okay, but this would be another example of a top Kelt skip. Okay, so these are more advanced. I would recommend you guys start with the original strategy, which is playing the price action in between. And then that is a little bit more reliable to go off of. And once you get familiar, right, then you can start to play other strategies. So as you guys can see, right, if it failed to keep, above the outer ranges here, it sinks below but pops back up, you short that, right? It showed weakness. It broke back down into the bands. So when it pops back up, you short it. You short it from here, it rejects and slowly bleeds through, and it uses the EMA as resistance. You would then move your stop loss here at the top of these wicks, and you'd probably get either you TP at this 1.5, scale out some, and then it pushes back up and you get stopped out right around here. But, that would still be, shorting around here, getting stopped out around here. That's still an 11.15% move, right? And this would be a swing trade. These are 1 hour's candles. And so you're looking at, how many bars here? You're looking at a decent number of bars. The date range on this is 2 days and 11 hours, right? So that would be your swing trade right there. Okay? So again, this is our Keltner Channel strategy that I'm sharing with you guys. I know it was a lot to soak in, but feel free to scroll back, read up on what we just did and how to set this up on your own charts. Remember, this only requires 3 indicators, so even free versions of TradingView can use this strategy. If you guys have any further questions, feel free to tag me in the questions or main chat channels on our official Discord, or shoot me a DM on Discord. Thanks for tuning in. This is TEAL39 with episode 2 of our Trading Strategies series. Thanks.